Hello, this is Joe Slezak, Director of Marketing and Business Development for H2R CPA. Thank you for joining us today. The Q&A session will occur at the end of the presentation. We have tried to answer as many of the pre-submitted questions as possible during the presentation portion of this webinar. Please use the chat feature to submit your questions, which can only be seen by me. Please note, since this presentation is being recorded, specific questions which contain identifying information will be filtered to protect our audience. I will now turn over the presentation to Paul Rudoy. Thank you.
Thanks, Joe, and welcome everybody. I'm glad you could all be with us again. One good thing about these webinars, I believe every day that I've moderated this webinar, the stock market has been up, and this is another day, so it's been good luck. We're up 350 points the last I looked. When we first realized that this pandemic was going to hit our region less than 2 months ago, I think one of the few things anybody thought we'd be talking about on May 7th was, how do you get people to come to work, knowing that you have as many as 20% of Pennsylvania is currently unemployed. But that's the situation we're in, and the complexities of this payroll protection program don't seem to get any less. So hopefully today we can spend some time helping get everybody a little bit more settled on where they need to go moving forward. And we're really pleased that we can have our legal friends here today to give us some guidance, because certainly some of these questions are most appropriate for them. So happy to have Pam Connelly from Strassburger, McKenna with us again, as well as Rachel Felton from Metz. So I'm going to kick it over to Rachel to get started with her part of the program, and I'll be back a little bit later.
Okay, good afternoon, everyone. As Paul said, my name is Rachel Felton. I am an employment law attorney at the law firm of Metz located in Pittsburgh. Today, we are going to talk about the effects that unemployment compensation and PPP loans have on returning your employees to work. It's safe to say that both unemployment compensation and PPP loans are complicating the return to work process and creating challenges for employers. I'm going to begin today's presentation by discussing the current state of unemployment compensation benefits in Pennsylvania. Historically, in Pennsylvania, eligible workers receive unemployment compensation benefits in the amount of approximately 50% of their wages. For example, if an employee makes $800 per week, the employee can expect to receive approximately $400 a week in unemployment compensation benefits, generally speaking. There is a maximum weekly benefit rate cap of $572 per week. If you look at that on an annual basis, that equates out to approximately $30,000 per year. So an employee who earns approximately $30,000 or less per year will receive full income replacement while they are on unemployment compensation. Any employee earning more than $30,000 per year generally will make less on unemployment compensation than he or she does through his or her usual wages. Pennsylvania also caps unemployment compensation benefits at 26 weeks. And like most states, as I'm sure you know, Pennsylvania has a waiting week and work search requirements in order to receive unemployment compensation. When COVID-19 hit, Pennsylvania made changes to its unemployment compensation benefits. It eliminated the waiting week and the work search requirements, the result being that unemployed workers are able to get benefits for their first week of unemployment now, and also they're able to get benefits without searching for other employment. Another change was that Pennsylvania broadened the reasons for which an individual can receive unemployment compensation. For example, an individual may be eligible for unemployment compensation where he tests positive for COVID-19 and can't work, or a person is particularly susceptible to COVID-19 and has been directed by a healthcare provider or their medical professional that they should be self-quarantining. It's worth noting that paid leave may cover some of these situations as well, which we're not diving into today, but just note that. However, once the paid leave is exhausted, these individuals, if they're still unable to work, could resort to unemployment compensation. So the actual result and the intended result of the changes under Pennsylvania law is that more people are eligible for unemployment compensation and it's easier to get it right now. In addition to changes at the state level, there were changes implemented at the federal level that have flowed down to the states. I'm sure you're all familiar with the CARES Act at this point, which stands for the Coronavirus Aid, Relief, and Economic Security Act. The CARES Act made 3 substantial changes to unemployment compensation benefits, 2 of which I'm going to specifically touch on. First, it established pandemic unemployment compensation, which is the first bullet point, and that's an extra $600 per week in unemployment compensation benefits. So an individual on unemployment compensation can now receive his or her weekly benefit rate that he would usually receive from the state, plus an additional $600 per week. That additional $600 per week is available through July 31st of this year. So right now there is an end date to it. I don't know if it will be extended or not, but nonetheless, the extra $600 a week is a substantial increase in benefits. It's double the maximum cap under Pennsylvania law. With the extra $600 a week, an employee, that makes the annual equivalent amount that an employee can earn approximately $60,000 per year. So generally speaking, an employee who earns less than $60,000 per year now will receive more for the same amount on unemployment compensation than if he or she were still working. Second, the CARES Act established pandemic emergency unemployment compensation, and that extends the length of time for which an individual can collect unemployment compensation by 13 weeks. As such, an individual in Pennsylvania can now receive unemployment compensation benefits for up to 39 weeks. Obviously, these enhanced unemployment compensation benefits make it more enticing for a segment of employees to remain on unemployment compensation versus returning to work, because simply stated, they make more on unemployment compensation. This is problematic as more businesses start to open up and want to recall employees back to work. So the question becomes, what should you do if you are ready to start calling employees back to work and they refuse because they want to remain on unemployment compensation? So again, going back to, if you're in a situation where you're ready to start calling employees back to work and they don't want to return to work because unemployment compensation pays better, the first thing that you should do is to make sure that your company is sending employees formal return to work letters. By that, I mean a letter which notifies the employee that he is to return to work on X date at his regular location at his regular starting time. If going forward, due to COVID-19, you have to make adjustments to the employee's position and pay, that should be stated in the letter. You should notify the employee of those changes in the letter. If the employee's position and pay are staying the same, you can state that in the letter as well. Ideally, in the letter, you would ask, like you do with offer letters frequently, you would ask the employee to sign and date the letter and return it to the company, thereby indicating his intent to return to work. The reason for issuing or preparing a formal return to work letter, sending it to the employee, asking them to sign it and return it, is that it will give the company a document for both unemployment compensation ppurposes and PPP purposes, which will be discussed later, to show that the employee was told to return to work. If the employee does not return, then the company can show the letter and use it to show that the employee failed to respond to the letter and failed to report to work. The Pennsylvania Unemployment Compensation Office has created a new form for employers to report employees who refuse to return to work. You may or may not have seen it. It is Form UC 1921, titled Employer Questionnaire Refusal Suitable Work. And the Unemployment Compensation Office has directed employers that if they have a situation where an employee refuses to return to work, the employer can submit this form to the Unemployment Compensation Office within 7 days of the employee refusing to return to work. The Pennsylvania Unemployment Compensation Office position is, you see in the first bullet point, if an employee is offered work and refuses to accept it with good reason, the employee may no longer be eligible for unemployment compensation. One question then is, when does an employee have good reason to refuse to return to work? That will be determined on a case-by-case basis. There are some situations that obviously are more clear than others. For example, if you have an employee who is refusing to return to work because he or she currently has a COVID-19 diagnosis, or they've been directed by their healthcare provider or some other medical professional to self-quarantine, that will be good reason for not returning to work. So a determination on how to precisely handle an employee's refusal to work does depend upon the facts of that refusal, and will factor in to the decision on as to whether or not the company wants to submit Form UC 1921 to the Unemployment Compensation Office. Just to be clear, there are no legal requirements to file the Form UC 1921. So if you do have an employee who refuses to return to work and they don't have good reason for their refusal, you are not required to submit the form, but you may do so. So those are our unemployment compensation considerations when looking at returning employees to work. And I'm going to hand it over to Paul now to discuss PPP considerations as well.
Thank you, Rachel, for your presentation. And it's really important that you pay attention to this issue, because many businesses are having this struggle, and I've been working with a number of our clients on how to deal with that. And specifically related to the payroll protection program, that was a program that was designed to solve everything for businesses that were affected by the pandemic. And a lot of people jumped on it initially, not really giving pause to say, is this really what I need to keep my operations running? So despite the questions that you answered affirmatively on the application, many people didn't study them as great detail as maybe they should have. So initially, there was $349 billion put to this program, and it was sold out very quickly. Then when the administration came out and it advised people that they had to comply with basically the needs test, even though it was somewhat arbitrary, people started paying it back. So the money still has not been completely allocated. So a number of people paid it back, including my favorite basketball team, the Los Angeles Lakers, got the money and realized that they had significant cash reserves and it wasn't appropriate for them to have it, and repaid the money. But now they've come out with verbiage, and again, not a calculation, but indicating that you needed to have some type of economic uncertainty to make this application on the PPP appropriate. And there have been 2 criminal cases filed in Rhode Island related to this. Now, I don't believe anybody on this call is going to have these issues because one of them was for a business that was completely closed before the pandemic. So the pandemic did not affect them. The other one actually made up employees to try to get the money. So they were clearly beyond the reach of what was supposed to happen. But if you come to the conclusion that you didn't need this because you had significant cash reserves and it wouldn't be appropriate for you to get this money, then you have now till May 14th, next Thursday, to pay this back. So the tracking of it is very complicated, but essentially, once you get the money, you have 8 weeks to spend it on these programs, or it turns into a loan. And additionally, they've added the requirements, the guidance that if you got a loan over $2 million, it'll be reviewed by SBA. And reviewed has been intermittent with the word audit. So we haven't had SBA type audits in the past. Some people are thinking that they're going to be similar to some other governmental loan audits or potentially like an IRS audit. But regardless, you need to have a story if you are not going to repay this. Why did you need this money? What caused your operation to have to occur? Was it your business was shut down, your business was not able to collect the money it could, it lost customers or clients, some other story that you have to say, my business was affected and that's why I needed this. The qualifying cost to retain it, assuming you have the right story, is payroll costs. And those are the items you see on the screen, your gross payroll, health insurance, retirement plan contributions. For this area, it's basically Pennsylvania unemployment taxes, and if you're in the city of Pittsburgh, Pittsburgh ET1 taxes. And that can count for whatever you spend. And additionally, 25% of your loan can be used for the operating costs. For most people, that's rent and utilities. And so also, if you own your own building, you can use it for interest on mortgages. Rent also takes into fact equipment. So if you have a computer lease, a copier lease, you're renting vehicles, you could use that as well. The limitations, you can't have anybody making over 100,000 annualized. So during the 8-week period, it'd be $15,384.61, and basically anything else someone else is paying for. You're getting reimbursed for sick leave or something like that through an insurance policy, that affects it. The other thing that reduces your forgiveness if you don't get there is if you had a reduction in your workforce. So if you had a number of full-time equivalents in February and you haven't brought them back yet, that will reduce your forgiveness piece. So you need to get your full-time equivalents at June 30th to where they were at February 15th, so you'll have a further reduction. And additionally, you can't reduce anybody's wages individually by more than 25%, or that also is a reduction. And then last, if you did not use 75% of the cost for payroll, that's a further reduction. So there's some way to meet those three components. That's ideal. Rachel touched on it, and we're going to go into this further, Pam, in the question session. But there is a process to identify when you can't get people to come back to work. And so that will be important to make sure everybody is comfortable with if they get in a situation where people won't return to work because of their comfort level on unemployment. So if you don't use all the funds, it becomes a loan, and the loan is a relatively attractive loan as far as loans go, only a 1% loan. It has to be repaid in 2 years, and no payment is due for the first 6 months. And if you are forgiven of the loan, then you'll be forgiven on the interest during the 8-week period as well. So there's a lot of considerations to do on this, and it's important that you get your ducks in a row as soon as possible and try to plan out what's going to happen in the 8 weeks from the time you get your money. What's your scheduled payroll? What's your scheduled health insurance, retirement plan contribution? What are your rent and utilities? In the big picture, I would tell people, don't spend money just to not have to repay this loan. If you're going to have to spend that money anyways, maybe look at the way you have things lined up and get them in this 8-week period. Because the forgiveness is nice, but if you're paying people or paying for costs that you weren't going to pay for anyways, it seems silly not to repay it as a 1% loan over 2 years as opposed to paying it to people right away that as a cost you really didn't want to have. So we're missing a lot of guidance on this. So we're trying to make best efforts on what should be necessary. But these are some of the things that we're still waiting for guidance on. So can you, if you have a retirement contribution and you are going to make it, a lot of people hold off on their match payment or defined contribution payment, or people who have defined benefit payments, and they pay them in the summertime. Well, is that okay? So we haven't gotten that clarified. Can you pay bonuses? Can you increase wages? And some people haven't gotten their money yet. So the 8-week period hasn't actually started. So the 8-week period is going to end before June 30th. Utilities. What counts? Some people do cell phones count. Appears yes, but they haven't defined that. And in the utility list, they put in gasoline, which I don't know how that's a utility, but so I'm expecting some guidance, but I would just say use common sense as to what do you classify as a utility in your financial statements and utilize that. And then the last thing is some people, I had one client where somebody quit to start their own business. I think they need their head examined. Who starts a new business in this environment? But so he lost an FTE. He's shut down. So he doesn't want to hire somebody. So does he put a family member on this payroll for 8 weeks to take care of that person's job to be able to meet the FTE? So those are some of the things we're waiting for more guidance on. Originally, the IRS came out and said the part that's forgiveness is non-taxable. And the IRS has not backed off that, but what they did come back and say that the expenses you spend are not deductible. So if you're spending payroll, you're spending rent, you're spending utilities with PPP money, then you can't deduct those. So it's basically a wash. But in between, Pennsylvania, Representative Dunbar presented a proposal to make the loan, the PPP, not taxable for Pennsylvania purposes. And then I saw an amendment last night that said it would just be not deductible for payroll costs. So I don't know where that'll come, but we could have a different taxation situation for Pennsylvania as opposed to IRS. And then there's, even though the Secretary Mnuchin feels comfortable with what the IRS released, there are some various people in the Senate that still want to be able to deduct those. So we'll see where that all comes out. But I'm going to guess in the end, you're not going to be able to deduct the expenses that basically the government was paying for you. So when the pandemic first hit, or I should say when the CARES Act was first passed, they came out with this EIDL loan, the Economic Injury Disaster Loan. And it was the idea was those people who, they can't eat next week. They created this $10,000 grant. And it's like everything else, nothing's as good as it sounds when they created this. But if you got a PPP, if you got a EIDL loan, that is not, has nothing to do with the payroll calculation, but it does reduce your PPP forgiveness. So if you got a PPP loan and you didn't have it when the time you applied for your PPP and you got the 10,000, your forgiveness has to go down by 10,000. And then they also created Main Street loans, and these are just basically traditional loans, essentially 4-year loans, and these were for larger businesses that didn't qualify because of the employee number, and so essentially at a rate of about 4% or less, and then additionally you have to have certain income qualifications. The loan can't exceed 4 times your average EBITDA. So you have to be a healthy business to be able to get these type of loans. The CARES Act created all kinds of changes in our lives and as tax professionals, but most of you probably know that virtually every income tax deadline is now July 15th, including estimated payments that normally were due April 15th and June 15th. July 15th is going to be kind of a scary time for many people because they're going to owe money for 2019. For many, that was a pretty good year. And then you have first and second quarter estimates. But that requires a little more thought. In the past, a lot of people safe harbored their estimates. Well, with the world we're in, most people won't have as much income in 2020 as they had in prior years. So it's important to look at that. Most states have gone along with the July 15th, but they're all over the map. June 1st, I think is the earliest date among the states. So if you have income in other states, it'll be important to look at that. They also created a credit program if you have people that can't work because they were afflicted with COVID, or they have come under the family leave, or they have to take care of a child. There are certain credits that are allowed on your payroll tax returns. And then there's also a deferral until 2021 and 2022 for payments, but that is not eligible if you receive money under the PPP. You can't do the payroll tax deferral if you got, in essence, the government paying for your payroll. There's a number of other nice provisions in the CARES Act. They repealed the taxable income limitation, and so that is where you were limited to taking a $500,000 loss on businesses, which was a last-second item that was put in the Tax Act in 2017. And people who had really bad years, disastrous time periods, that was a real limitation. Well, now they can go back and amend their returns and get that back. Additionally, you can get more money out of your retirement plan. First of all, if it's for a COVID-related reason, you're exempt from the 10% penalty. And additionally, you can take out $100,000 if you fall under the issues related to COVID. You don't have to be afflicted with it, but if you're economically affected by that, you can then take up to $100,000, and it's tax-free as long as you return that money to the plan within 3 years. The RMD requirement was waived, so if you don't really need the money, you don't have to pay the tax on it. And I think the theory was there with the market having a big drop, why should you have to take money out at 2019's prices? And then the qualified plan loans also increased. Before the limit was 50,000, now it's up to 100,000. So if you just want to borrow money from your plan, you can do that. Little benefit to people. People now can get a $300 deduction above the line. So if you're not itemizing your deductions anymore and you give at least $300 to charity, you get a little tax deduction. And then there's a removal of the limitation. It was up to 60% of your income. It was limited to taking the charitable deduction, and now that is no longer part of what 2020's taxes will be. So I'm going to turn it back over to Pam, or I'm going to turn it to Pam to take us through the remainder of the presentation.
Thank you very much, Paul. This is Pam Connelly from Strassburger, McKenna. Thank you also to Rachel. They have laid out very, very clearly a very complex rubric of a number of new laws that are going to be keeping us all busy for a long time. So we really wanted to do a little bit of a deep dive in the rest of this session on, when we're talking about this rubric, where the different laws come in to sort of clash with each other, particularly around bringing your workplace back to work. So all of us on this call have received a lot of questions on that. So let's dive right in. And Rachel, I welcome you to chime in at any time. I know I'll take the first batch of these questions, then I'll pass the baton to you, but feel free to lend your advice as we're moving through at any time. All right, question number one, as you can see on the screen, is it comes from someone who's asking, I can't operate my business due to the state restrictions. We're all closed. Can I pay employees who are not working with my PPP funds? Now, based on our best guidance to date, and as Paul said, we are waiting for lots of guidance in many areas here. We're trying to work with what we have and using our common sense as well as our knowledge of the purpose of the Paycheck Protection Funds. And the best advice that we have today on this issue is that you can use this to keep your employees as employees of your business, even though you might not be open and they might not be working day to day. I know with some of our clients, I've advised, to the extent it's possible at all, consider trying to find some portion of work or engagement that you can keep up with your employees during that time. Even if they're not coming to work, say you're working in a hair salon or something like that, perhaps you could have them from home emailing customers or doing things from time to time that are keeping them actively engaged. But yes, you can use the PP loan to keep those people on the payroll. That's really core to the underlying rationale of the entire program. Question number 2, what steps should I take to return employee to work? Rachel hit on this very well, which is develop some form documentation that you're going to send to employees that tells them the terms and the conditions under which they can come back. You know, behind the scenes, you all are probably already working on this, but you're going to have people or a team of people that are working on developing workplace protocols that ensure or try to improve health and safety in the workplace environment. So to the extent you have any workplace safety plans in place, it's good to publicize those to employees when you're bringing them back to work to try to reduce any fear that they might have. So you're going to want to make sure you're communicating, you're documenting, you're doing that equally for all of your employees when they're ready to come back. Number 3 is, okay, you after you've got that good documentation, you've got your work plan, you send out your notice. What happens if employee refuses to return to work? I'm afraid, I'm frightened of COVID. I don't want to. I'm making more money staying home. What should I do? And this circles back to some of the advice that we heard earlier. The first thing you're going to want to do is make sure that you have some documentation of the refusal to work. Now, that optimally, in a perfect world, you've got the employee sending you back a written statement that says, I refuse to work. From my perspective, that's not required as long as you can document. You can document that, you know, Sally told me on this day, this, that, and the other, and you put it in the file. Either way, you can get the documentation from them, or if worse comes to worse, you can create the documentation. Once you have the documentation, you have a decision to make. As Rachel said, you're not required to contact the unemployment compensation office in Pennsylvania. You may do that because under normal circumstances, usually refusal to work will end unemployment compensation. One thing I would advise when you're letting the employees know about the return to work, either at that time or perhaps when they refuse, you're going to want to let them know in writing that there are possible consequences to their refusal to return to work. I would couch it as possible because we don't know what will happen, but consequences include, you know, you could lose your job, you could lose your seniority and other things, and you could lose unemployment compensation. Although, very important to note, the employers don't make that decision. Pennsylvania Unemployment Compensation makes that decision. And as Rachel said, you know, there could be a situation where maybe the employee says, I don't want to come back because my spouse has asthma and I'm afraid I'll bring something home. You know, you as an employer might think, well, that's not a sufficient reason because I have the person working in isolation and I have PPE. So you consider it a refusal to work, but the Unemployment Comp Board might come out differently. We just don't know today. So letting them know about potential implications, although, you know, I wouldn't say, you know, for sure anything's going to happen there.
I would just like to add, as some of you may be familiar with, that the SBA did come out with guidance this week on how an employee's refusal to return to work may or may not impact loan forgiveness. And it ties into, as Pam is saying, if you are, you know, send the employee a return to work letter telling them when to return, their pay and things like that, and the employee does not return to work and you can document that they've refused to return to work, you may be able to avoid having that employee's failure to return to work affect your loan forgiveness. So it's important to make sure that you understand the SBA's recent guidance on that and follow it with the hopes of minimizing any potential negative effects on loan forgiveness. One question that we hear a lot is, as Pam said, can I prepay employees' wages? Can I prepay their benefits? And since there is a short period in which to spend the PP loan funds, Employers may be tempted to prepay wages and prepay benefits to spend the money. As an example, let's say you want to try to pay your employees August wages now, or their benefit payments now, or to accelerate 401k matches. As we've discussed, we don't have precise guidance on this issue. That I think it is a risky practice, and don't recommend accelerating pay or benefits that have not yet been earned by the employees. I think it's important to keep in mind, as Paul said, the amounts that are spent are going to have to be reported, and there is a possibility of an audit down the road. So I think it's better to err on the side of being cautious in this area. Question number 5, can I reduce employees' wages or salary if necessary for my business? Again, Paul touched on this during his part of the presentation. You can reduce wages or salaries. However, if you reduce an employee's wages or salary by more than 25% compared to the most recent full quarter in which the employee was employed prior to the 8-week spending period, then the amount of that reduction will reduce the loan forgiveness. If the reductions are less than 25%, there is no penalty on loan forgiveness. Question number 6 is, can I hire new employees? Can I pay the new employees more? And the answer to this is yes, you're allowed to hire new employees. Yes, you're allowed to pay them more. The employees on June 30th do not have to be the same employees as those who were in your initial head count. You can also pay the new employees more, although I believe that the additional amounts the new employees are paid should be reasonable. You should be able to justify why the new employees are earning a higher rate. A lot of that, everyone knows employees need to be incentivized right now to be returned to work, so that covers or provides a good explanation, but I wouldn't be forking over windfalls of money to employees, again, due to the concern that there may be an audit process down the road. Question number 7, should I be concerned about fraud? And so we've talked about 2 types of fraud today. We've talked about fraud with respect, I'll use that label to the unemployment compensation topic. If you have an employee who's been told to return to work is available, he doesn't have a good reason for not returning to work except, unemployment compensation pays better, and I don't have to do anything, that can be reported to the Unemployment Compensation Office using the UC 1921 form. With respect to the PPP loan, I think it's important to remember that there was a certification that the loan funds were necessary for ongoing operations, and that was at the front end of the process. And at the back end of the process, there is, as I said already, a potential for an audit. I don't think this is a situation what Paul made mention of where you want to be creating a fictional company. That's an easy one. But you also don't want to be making up fictional employees and putting them on your payroll. I think that there is also caution should be used around putting a family member on the payroll and paying them, especially if that family member is not doing any work. If the family member is doing work, that's easier to justify why they're getting a payment. But I think it's important to, just have your story, like Paul said, stick to that document, make sure that you keep with the spirit of the PPP loans, and know that, on the back end, there may be your records, your documents, what you did may be scrutinized. And after that, that's our last frequently asked question. And so Pam is going to give us some tips and recommendations as to best handle these situations in returning employees to work.
Thanks, Rachel. Yeah, I'm going to cover this pretty quickly, and then we'll have some minutes that we can touch base and run through some other questions that might have been submitted to Joe during the course of this webinar. So the 3 C's are the big recommendations that I give people in dealing with this. The first is communication. And I touched on that a little bit earlier, which is, making sure, and writings really help, but making sure you're developing some consistent, some forms that you are communicating and letting them know, here's what you're going to be coming back to, here are the terms, and that the communication also can cover things like, here are the potential consequences if you then we're going to cover consistency and confidentiality as well. So the one thing that I found effective so far with the communication with employees is, again, this communication about potential consequences. They need to at least be on notice that they have a potential for their job to be at issue, for their benefits to be at issue, and for their unemployment compensation as well as seniority. You want to also communicate with the Commonwealth through the form that Rachel has talked about, and make sure that you know that it's got a real short time frame on it in Pennsylvania. There's a 7-day period that you're supposed to submit that form for refusal to work. Okay, the next is key when you're dealing with employees in general, and that is consistency. I would advise to develop standard forms that you're providing the notice on, standard requirements that are applied to everybody to the extent that you can, and standards for your responses that you're sending back to people. The only caveat there is if you wade into an arena of disability-related information or healthcare information, of course, most of you know, there's generally an obligation to engage in an individualized analysis in that circumstance. And if you develop a record-keeping system on all these issues, that will really help you with consistency. Your consistency with Commonwealth is really going to help you avoid discrimination claims. What you don't want to happen is for your employee to come back and say, only people in this protected class had a form filed with the Unemployment Comp Board, but all the people that worked in the office who happened to be of this race or gender, nobody filed anything. So make sure you're consistent when you're dealing with refusals to work. Next, let's talk about confidentiality. Because right now you're going to be inundated with health information probably at a higher rate than you normally do, and you're normally engaging with in the workplace right now, just because everyone has such heightened fears of COVID. Make sure that you keep the medical information on a need-to-know basis, and that's going to require some analysis. If you have to do contact tracing and things like that, there is going to be some lesser degree of confidentiality, at least with the contacts that you're reaching out to. But be careful to protect medical issues, medical documentation in a separate filing system as you usually do. So the final piece here, we went through the 3 C's, and the final slide really says what you've heard from us so far today. And that is to keep learning. The guidance is trickling out from time to time. The regulations continue to be published, and there's new laws. There could be extended laws. So I really can't stress enough that you have to keep learning about these, keep on top of things. If there are decisions that you feel are real gray areas, for example, both Rachel and Paul raised the issue of hiring relatives. Perhaps, you decide if it fits with your business, that's a decision that you'll make in a week instead of making today, because things are really changing that quickly. So that's it for this portion. I will hand it back to Joe so that he can moderate any remaining questions.
Thank you, Pam. If you have any questions, please use the chat feature to submit your questions. They can only be seen by me, and I will, of course, remove any identifying information to protect our audience. During the process, we did already receive a few questions. I marked when they came in. As such, I'm just going to call upon the individual who is speaking to answer the question, mostly as a starting point, but if that's not appropriate, please pass the baton. Pam, this question came in during one of your Q&A sessions. And so if they have an employee on maternity leave during the 8-week period who's part-time and doesn't have PTO benefits and doesn't plan on returning until August, is there any advice that you might be able to add to help them understand what the best way to move forward with that process?
So the employee is on unpaid or paid maternity leave?
It's on maternity leave, part-time, no PTO benefits.
So she's essentially on an unpaid medical leave. And the question is?
Question's any advice?
Any advice? I've actually had a similar situation at a local university where there are things that you can do from home that can bring the person back on a very limited basis, but be able to have the person sort of qualify for this program. So I don't know how far along the person has been. So say the person's been out for 6 weeks. It might be something you could have a conversation with the employee, and some of it might depend on whether or not you're subject to the regular FMLA, or if she's been with you long enough, which she probably has, for the expanded FMLA under the FFCRA. But you could have a conversation with the employee. If the employee is willing, and in this other case, the employee was very willing to step in a limited role sooner than she expected, that is a win-win in some ways. You can get the person back to work doing what you need to be done. You can help the person ease back into it. You can spend your PPP funds. And also the person might be preserving leave for when she comes back. So say the person begins working and then comes back and gets COVID or needs some COVID-related time under the FFCRA, she will have preserved that instead of using it if she came back, you know what I'm saying? So I would encourage, these are really unusual times with a lot of different avenues available. So I would encourage first exploring whether or not you could put her to work in a meaningful way for you to help the business on a limited basis, and see if that's something that she might be interested in.
Rachel, when you were talking, this particular question came in. They have part-time employees and may not need them until after the 8-week period. Would this reflect in the 25% decrease in pay?
If they have part-time employees that they're not going to be bringing back until after the 8-week period?
Yes, because they were going to bring them back once business picked up.
I would think that it would result in the amount of the loan, if their wages were included as part of the loan application, I would believe that it would result in a reduction of forgiveness later. But if they weren't included in the loan application, it shouldn't.
So I just add again, the whole forgiveness is based on gross pay. So whether you're paying full-time people or part-time people, that factor doesn't matter for the calculation. But the second piece is the further reduction occurs if your full-time equivalents go down. So if this person wasn't a full-time equivalent, it won't necessarily hurt the payment part, the forgiveness part, but your total gross wages are going to be less. So it's really important to study what the scenarios are. You're not bringing back any of your part-time people. What would your gross pay be? Where does that stand in terms of what the loan you got? Where does that stand in terms of meeting 75% of the loan as payroll costs?
And Paul, I think need some clarity. Am I comparing post-PPP loan wages 8 weeks from loan signing to the entire first quarter, or 8 weeks of the first quarter? Wages have decreased due to lower commissions on sales and no overtime. These are factors.
Okay, so again, it's simply wages paid in the 8-week period. So however you got this loan, assuming you filled out the application properly, it is what were the wages paid in that 8-week period? What is your loan amount? The FTE issue is what was the FTE at February 15th, and what is the FTE going to be by June 30th? So the fact that your business is down, the fact that people can't earn a commission, that's almost a side conversation. But again, if you were never going to pay these people this kind of money, don't just pay people more so you don't have to pay this back. That just does not make sense. If you want to reward them for something else they did, that's fine. You were planning to do it anyways. Like if they clarify that you're allowed to pay bonuses, I've heard a lot of people say, well, maybe I'll pay my holiday bonuses instead of paying in December, I will pay them in June. So those are the kinds of things that to look at as the guidance becomes more clear in your particular situation on where you're at on that 75% in the whole loan.
And Rachel or Pam, I believe you covered this one. Could have been Rachel, but I'm going to go with Pam. Was there a start date for the extra $600 in regard to when someone's laid off? If they were laid off at the beginning of March, are they still eligible for the $600 extra $600?
I think that one's Rachel. So the question is essentially, when did the extra $600 start?
Well, the question is, they were laid off before the pandemic. Are they? Can you expect those employees still to be eligible to receive the $600 in unemployment benefit?
If they were, the extra $600 started the first week in April. So it doesn't matter when you were laid off. If you were laid off before then, the weeks occurring before April would not have this extra $600. The payments occurring after would.
And then this one, I have this one a few times, Paul. So the individuals, they received their loan in the middle of a pay cycle, and they're trying to figure out if their loan repayment date starts, in fact, on the day they received the loan, or if there's a little bit of wiggle room to coincide with their pay cycle.
It's a great question, and it's I get 3 to 5 times I get this asked a day, and I really don't have a definitive answer. But this is the guidance we've had from talking to some people who are SBA lenders. Just go on the cash basis. So if you got your loan on April 22nd and your first pay was on April 27th, count the whole April 27th pay. It should catch up, because when you get 8 weeks from April 22nd, you're going to have a shorter pay period. So in essence, it's not when did the people earn the money, it's when did they get paid. Again, we're waiting for guidance on that, but until now, it's based on when did people get their paychecks, not when they earned the money.
And staying with that forgiveness theme, so when the person did the original calculation, they had the 2 full-time employees and a part-time employee, and the part-time employee did not get work. Will they still be eligible for forgiveness for the 2 full-time employees that returned to work because the part-time employee did not return to work?
Yes, because it's that reduction is for full-time equivalents. So if you had 2 full-time equivalents at February 15th and you're going to have 2 full-time equivalents by June 30th, then you won't have a reduction for that. The problem is your payroll is probably less. So you're probably not going to meet the whole loan amount because you have less payroll.
Pam or Rachel, this one's for you. So they had an employee that came back and decided they weren't comfortable and chose to leave. Would you recommend they continue paying him with the PPP funds?
That's really going to be an individual business decision. I think that you would be permitted to do that, or you can, you could terminate the person for not having him, for not returning to work when there's work available. There are some fairness and equity issues that get really complicated because, some people can work from home and some people can't. But if there's work available and the person goes home, you're well within your rights to terminate the employment and to submit the corresponding documentation to the unemployment office. But the question was, what should they do? And that's really, going to be an individual business decision. Rachel, do you have a different perspective on that or anything to add?
No, I agree that that is a business decision. But to repeat what Pam was saying earlier in her part of the presentation, make sure that there's consistency. Don't terminate one employee for doing that and not terminate another employee for doing that. You definitely want to show consistency to avoid discrimination claims.
And this will be the last question. Again, for those individuals, if we did not get to your question, I will make sure we follow up with you. I'm going to send it to Paul because it's a similar theme. And I know, Paul, you said it was about gross wages, but the question is, how are full-time employees calculated? Are the hours divided by 30, 40 hours? Does the actual designation as far as whether full-time or part-time, does that make a difference in regards to the PPP loans, or is it just the gross wages?
No, there's two caps. So gross wages is the calculation that determines if you are going to have to repay part of this or you're forgiven. And you can use up to 25% for the operating cost of rent and utilities. But if you don't spend 75% on payroll, that's one forgiveness calculation. If you don't spend the total, that's another forgiveness. And the last one is if your FTEs aren't the same at June 30th as they were at February 15th. So three different components that you have to meet. So in terms of what's an FTE, so again, some vagaries here, but we're interpreting it as anybody who worked 30 hours or more a week is considered an FTE.
With that, Paul, I'm going to turn it back over to you to close off the session.
All right, thanks a lot, everybody, and thank you, Rachel and Pam, for doing an outstanding job and clarifying a lot of these issues. They're complex, and we don't have definitive answers. Many things we are giving you our opinion on where things stand today. So please keep checking with your advisors as to what makes sense, but the communication is really important, and game plan is real important. Figure out where you're going to be on this loan situation, get your story together, write it down, document it as to what happened in your business, why you needed to have this PPP loan. So your bank is going to probably ask for something. If your loan's over $2 million, you're probably going to have more inquiries. So make sure you have a good story and it's well documented and you can present it to people. And again, we'll keep putting information out there, but stay attuned to what's happening with changes to see where we're at with this. So thank you very much for your time today and your participation and your interest, and we look forward to helping everybody in the future.